Hi, this is Zak Mir with the Bulletin Board Heroes on Thursday, the 28th of November. Starting off with the Aortec International, where it looks as though we've got a bona fide breakout here for the shares after a number of attempts to hold and sustain the 80 pence area. Yesterday's low at 78 pence, and while we're above that, looking for a top of one-year trend channel target as high as £1.60 over the next 2 to 3 months. The bull argument helped by the golden cross between the 50-day and 200-day moving averages earlier this month. Stock which may be in need of friends and may have found some friends in terms of the technicals at least, and trying to ignore the fundamentals, or the alleged fundamentals, is Amigo. Here we've got the breakout through a falling wedge at the bottom of the range at, I suppose, 61, 62 pence, 62 pence, let's say. And while we're above that, looking for at least an intermediate rally towards last month's resistance at 80 pence. Good bullish divergence there in the RSI window, and also a sort of a bear trap effect from below that old floor at 66 pence way back in August. So it'll be interesting to see whether the technicals win there or the fundamentals, but at the moment, at least in charting terms, we have a reasonable setup. If you're cautious on the shares, which maybe one or two people maybe, we've got an end-of-day close above the 50-day moving average at 68 pence would be a reasonable confirmation of a potential sustainable rally for the shares. No such problems at Pharmaceuticals, where we've had a decent run on a couple of occasions, both in October and November. We've got a gap higher today through the 200 pence level, and while we hold above the intraday low at well, I suppose 199 was the intraday low, looking for further gains for the shares, breaking recent 250 zone resistance and heading as high as the top of last month's trend channel at £3.25. Rising 50-day line hasn't been touched since the beginning of last month, which is a big plus, and the RSI actually only at 65, which, given the way the shares are at the moment, is a pretty good signal of further possible momentum for the stock. Good news for Immu Pharma today, and the shares making the most of it, gapping through both the 50-day and 200-day moving averages. Even though there's been a big move, looks like there could be some way to go. We've got a resistance line projection from back in February heading towards 21 pence, and the way things stand, probably that would be the minimum on the upside, retesting one-year resistance in that area as well. Stop loss on the buy argument, probably back below 12 pence would cover it. Unlikely, in fact, that would even go back below the opening price today at 13 pence, or ideally we would not go back below that over the near term ahead of a move higher. On to Metal NRG, which has defied all the disbelievers and has managed to go even higher, in fact, than the last target I suggested here at 0.8 pence. In fact, we've hit a measured move target at 1 pence, and be interesting to see whether any progress towards 1.1 or 1.2 pence can be made. But obviously the shares have gone up a long way in a short time. Possible a retracement back towards the old 0.8 pence zone, which would then presumably be a dip to buy into for Metal NRG. Stock that I covered on November the 11th here as a tentative bullish situation. There was a pullback to the 50-day moving average for Oracle Power, but we powered ahead today. Bit of resistance in the 0.4 pence area, but end of day or a weekly close above that could take the shares up to the top of a broadening triangle from March up to 0.7 over the next couple of months, or at least the end of the year. Stop loss on the whole bull argument still back below the 50-day line at 0.24. New stock in the near term for the Bulletin Board Heroes comes in the form of OPG Power. Here we've gapped through the resistance line from the beginning of the year at 16 pence, and while we remain above that, looking for a push towards the main post-February resistance, 22 to 24 pence. The stock's hit that quite a few times, and end of day close today above the 200-day line at 18 pence should confirm that the shares are capable of moving up towards that kind of area, and perhaps more actually, given the gap high that we've seen. Obviously we had a gap higher through the 50-day line in July, which was sold into. So we'll just see whether the stock can shake off the bears rather on this particular occasion. Finishing off with Petrel Resources, just to see how far and how fast it's going. A massive move, obviously, that we've seen after the break through the September resistance line and the 50-day moving average at 7 pence. It was interesting that the shares took a little while to take off, which might have fooled some would-be bulls, but the big target here could be as high as 40 to 45 pence at that July resistance line projection after any consolidation around, I suppose, the 20 pence area. There could be a couple of days or a few days of such a consolidation, given how oversold the RSI is at the moment at the 90 level. That's it from me. More updates tomorrow.